Hello, everybody. This is Fred Stewart with Stewart Group Realty. Friends, I'm very, very excited to be out here in Clackamas County with a good friend of mine, and what I think is one of the most important mortgage brokers in Oregon right now. Jeff Foody sells a niche product that a lot of people don't know about, and a lot of people who do know about don't really understand it. So we're going to take a few minutes today, and hopefully this is not the last time, Jeff, we talk about this, because this loan has got a lot of different facets to it. Mm-hmm. We're going to be talking about reverse mortgages today out here in Clackamas County at the Pacific Residential Mortgage Office. Out here, what's the road out here? Sunnybrook. And Jeff, thank you for taking the time to sit down with us.
Of course.
Jeff, can you explain to me how long you've been in the mortgage business?
So I've been doing reverse mortgages exclusively for 15 years.
Wow.
Yeah.
15 years.
I don't know anything about traditional forward mortgages. That's why I work at Pacific Residential Mortgage. They've got people here that are experts in that sort of thing, but I only do reverse mortgages. This is all I know. I know them backwards, forwards, inside and out.
Now, Jeff, 15 years is a lot of experience, and that's one of the reasons why I want people to meet you. People don't understand that experience in everything, of course, is great, but when it comes to mortgages, with all the changes that come up from time to time, being able to understand how to apply those changes to people's real-world lives is very important.
I completely agree.
Now, what are some of the things that a person needs to know? Let's say the first 3 things a person needs to know when they're considering whether or not a reverse mortgage is good for them.
Okay, great question. First of all, are they over 62? The most important thing is you have to be at least 62 to be able to qualify. Do they want to stay in the house? Is it a primary residence, or if they're purchasing a new house, are they going to purchase a primary residence? And then second, or that's second. Third is if they're trying to stay in their existing home. The other thing they need to understand about reverse mortgages, the qualifications are really simple. It is a government sponsored. It's an FHA program. So a lot of people are concerned about reverse mortgages. They don't understand them. They hear myths and misconceptions about reverse mortgages. But I'd say first, are they over 62? 2, do they want to stay in the house? And 3, understand this is a safe program. It's an FHA program. It is not as scary as people think.
Now, when you say it's an FHA program, this is something that a lot of people need to understand. This is a federally backed program.
Yep.
This is something that the federal government is offering. So there's nothing like, this isn't something like some guys in New York hedge fund is trying to figure out a way how to rip people off.
Correct.
This is a federal program.
Correct.
How old is this program?
It's been around since 1989.
Wow.
It's been around for a long time. It undergoes a lot of changes. There's been a lot of changes and growth in the industry and the program. One of the reasons that I really like this program is because it's federally regulated. You can talk to me, you can talk to my company, you can talk to 10 different reverse mortgage companies. The program's exactly the same. Closing costs are going to be pretty much the same. The amount they qualify for is about the same. Rates are going to be about the same. It is a level playing field. It is just whatever the FHA has created the guidelines of the program, and we're just doing the same thing. So
Wow.
It's safe for consumers. And the regulations are really simple.
Well, let's get into exactly what is the meats and bones of a reverse mortgage. We know what a regular mortgage is.
Okay.
You get a mortgage, the lender gives you the money, and then you make monthly payments. Mm-hmm. What's the difference in a reverse mortgage?
Okay, so a traditional mortgage, you're taking money out of your bank account every month, you're paying down a mortgage, and theoretically, you're increasing the equity in your home because you're paying down the balance. Reverse mortgage works backwards. You stop making mortgage payments, which means the balance of your mortgage is going up, and you're going to be shrinking the equity in your home, theoretically. It depends on what's happening to the housing market. So the meats and potatoes is, imagine, if you would, with a traditional forward mortgage, imagine a 30-year fixed loan that instead of making mortgage payments on, you deferred the mortgage payments. So you don't make payments every month. If you deferred the payments, the balance is growing, And at some point down the road, you're going to repay that balance plus the interest that accumulated. That's really what a reverse mortgage is you're just deferring the payments, and they'll be paid at some point down the road rather than making payments every month.
Now, what's the term of a reverse mortgage? Your average traditional mortgage is 30 years or 15 years. What is reverse mortgages?
Reverse mortgage is based on their life expectancy. So if you have a 62-year-old, it could be a long time. If you have a 95-year-old, it could be a short time. But as long as they're based on the two borrowers that are in the home, the proceeds of the reverse mortgage are based on the age of the younger borrower because it's based off mortality tables. So it all depends. It's based on the rest of their lives. So if you could tell me what's the conversation that financial advisors always have, they would say, well, if you can tell me when you're going to die, I'll give you a perfect plan on how to plan for it. Reverse mortgages is kind of, it's based on the rest of their life. So whether they're in the house, whether there's equity in the house, whether there's not equity in the house, the reverse mortgage is based on the rest of their life. As long as they're in the home, as long as they keep up the taxes and insurance, they never have to make any payments or repay the loan as long as they're living in it.
And if let's say that the lender estimated you're going to be alive 25 years and you ended up being alive 30 years, you're not penalized for that, are you?
No. Once they set up the reverse mortgage, they based it on the age of a younger borrower. So a 62-year-old will qualify for about 50% of the equity in their home, just a ballpark. So if they live in their house until they're 105 and they've used up all of the equity in the house, all the remaining 50% of the equity in the house, they still get to stay in the house. All they do is keep up the taxes and insurance. The idea is FHA wants there to be equity in the home because they're insuring the loan. So the chances of it going upside down now are they're pretty slim. They've kind of designed it that way. But even if it does go upside down, FHA eats the difference. There's a mortgage insurance premium on these loans. They're a non-recourse loan. So even if a borrower has a $500,000 house, they take out $250,000, it accumulates interest for the next 40 years, and now they owe $700,000 on a $600,000 house. You can't pass on the debt to your heirs. It's a non-recourse loan. So FHA comes in, eats the difference, and they get to stay in the house for the rest of their lives, even until they're 105 or 150, and they don't have to make any more mortgage payments as long as they're in the house. That's a big deal.
Incredible.
Yeah.
Now, most loans, and this is one of the exciting parts I think about reverse mortgages, because this is one of the real big differences. Okay, you're 62 years old, you want to get a reverse mortgage. What credit score do you need?
I love it. I appreciate it. That's a softball question. There's no credit score. Reverse mortgages, no income qualifications, no credit qualifications. There's no minimum debt to income ratio. None of that matters with reverse mortgages. There is a financial assessment tool where we have to look at a borrower's finances to make sure that they can afford their taxes and insurance. But other than that, there's no credit score. There's no debt to income ratio. There's no minimum income requirement. You have to be able to maintain property taxes and homeowners insurance. That's it. It's pretty minimal. So that's one of the reasons that I don't understand forward mortgages, debt to income ratios and credit scores, and you have to be able to prove your income. It's like trying to fit a round peg in a square hole. Reverse mortgages, it's simple. If you're over 62, you live in the property, and you meet some minimum qualifications, you qualify. It's pretty simple.
Let me ask you, some people who are over 62, maybe they were planning on working longer, maybe they're self-employed and they're planning on working longer, and they get sick and they can't work as much as they used to. Have you ever heard of a reverse mortgage being used to eliminate their mortgage payments so they don't have to worry about that as they're recuperating?
So the benefits from the reverse mortgage, they can use for anything that they want. So let's use our example. $500,000 house, $250,000 is what they qualify for. If they owe, say, a $200,000 mortgage, first thing we're going to do is we're going to get rid of that existing mortgage. We're going to take $200,000 of the $250,000 and pay off their $200,000 mortgage. So they don't have mortgage payments anymore at all. And then they're going to have an extra $50,000 to do whatever they want with. So that's in the example that a borrower has an existing mortgage. But let's say a borrower doesn't have an existing mortgage. Let's say they're 62 and their home is free and clear. Well, why on earth would they consider a reverse mortgage? Well, the reverse mortgage has an interesting tool. It's a line of credit feature where the $250,000 that they qualify for, they don't have to use any of that money. They can take out just a portion if they want to, but let's say they don't want to touch any of it. The reverse mortgage has a line of credit that acts like a financial security blanket. The money's sitting in a line of credit that's available to them, and anytime they take money out of that line of credit, they don't have to repay it. And while it's sitting in the line of credit, the line of credit actually has a growth rate. So it actually continues to increase, and it's set up for the rest of their life. So maybe they don't need anything right now. To answer your question, maybe they're fine now, they're making their mortgage payments and they're okay, but they get sick in 10 years. Well, then what? The reverse mortgage line of credit acts like a financial security blanket that they take the money out in 10 years or in 15 years, whenever they need. I met with a gentleman in Chicago a couple of months ago, and he was telling me about how seniors will plan for their funeral. They will plan the flowers. They will plan the casket. They will plan their entire death, but they don't plan for if they fall and hurt themselves. They don't have a plan for that. Well, the reverse mortgage is a way for people to be able to plan for their retirement in the event that maybe they aren't healthy. Maybe something does happen. Maybe they need some of that equity in their home. The reverse mortgage is the tool to give it to them.
Outstanding, Jeff. Jeff, there's one more thing I want to bring up on here, and this is going to help. I got a lot of people who are in their 60s who come to me as a real estate broker, and they go, Fred, we decided we want to sell our home because our grandkids live, here, there, and everywhere. We want to downsize, but we also want to be able to buy a home so we can be near our grandchildren. People have worked hard for 30, 40 years. They deserve to have pleasures like that. One of the interesting things about reverse mortgages you told me about is in some cases, a person who qualifies can use a reverse mortgage to buy a home. Can you explain about that?
Absolutely. That is a widely underutilized program. So let's say a borrower sells their house and it nets out $250,000 in cash and wants to buy a house in Portland. Well, what do you have for $250,000 in Portland metro area? Not much, right? So traditional wisdom would say, I talk to a mortgage broker and I buy a $500,000 house, I put $250,000 down, and I need a $250,000 mortgage. Right, so they go and they talk to their mortgage broker. They have to prove their income and their debt and their qualifications, their credit scores, and they qualify for a traditional forward mortgage and they make mortgage payments. That's traditional thinking. Well, what people over 62 should realize is that that loan that they need to make up the difference can be a reverse mortgage. So if they're coming to the table with $250,000 and they need a $250,000 mortgage to buy a $500,000 house, the reverse mortgage can be that $250,000 mortgage. So imagine a loan that has minimal qualifications and no mortgage payments. So if they come to the table with $250,000 and say, Fred, I got $250,000 in cash, I need to buy a house in Portland Metro for $500,000, but I have limited income, a reverse mortgage would allow them to buy that $500,000 house and they don't have to make mortgage payments on it.
Now, friends, if you can put your head around what Jeff just explained to you, if you're 62 years old and older, you can use reverse mortgage to buy your next home. And while you may be planning on retiring at 62, 65, or 70, when you're retired and you're on a fixed income at that point, if you use this tool to buy your home, you won't have a mortgage. So
mortgage payments.
A mortgage payment.
Yeah.
You won't have a mortgage payment to make. And this could be a game changer for many hardworking people out there who are just trying to find a way how to move on to that next step in their life.
Yep.
Whether it be downsizing and moving to the coast, or moving to Arizona, or moving next to the grandchildren, or just downsizing in general. This is a tool that a lot of home buyers out there, and understand this, the minimal qualifications needed should make it even easier for you to buy that final home.
Yep.
So anyway, hey Jeff, I appreciate you taking the time to explain all this to me and everybody.
Of course.
Let's do this again. Is that okay?
Absolutely.
Because there's more to this loan than what meets the eye so far.
Yep.
And Jeff, what is your phone number if anybody's got any questions?
I can be reached at 503-427-1667.
And what is your email address?
Jeff.Foody at reversenorthwest.com. That's Reverse Northwest is all spelled out.
Great. And what is your website?
Reversenorthwest.com.
Everybody, thank you so much for taking your time to watch this video. If you have any questions, like I said, feel free to give Jeff a call. Call me or your favorite real estate broker. Feel free to make me your favorite real estate broker. Anyway, this is Fred Stewart with Stewart Group Realty out. You guys have a good day.